Well, a very good evening and thank you for joining us on India Business Hour. I'm Ashmit Kumar and here are the headlines that we're tracking at this hour. India's trade deficit falls sharply to below $18 billion in January, the lowest in 12 months. Imports at $50 billion is the lowest in 16 months. Exports are also down 6% on an annual basis. Finance Minister says government is keeping a close watch on imports, adds that a surge in imports for 3 months can hurt for a whole year. Finance Minister remains non-committal when asked about further reduction in export duties. Government sources say that the centre's aim of an RBI dividend of close to 30,000 crore rupees next fiscal is a conservative one. Sources say that the government would be sticking to its FY23 deficit aim even if divestment receipts falls short of the revised estimates of 50,000 crores. Stock markets rise with Nifty reclaiming 18,000, hitting the highest level in almost a month. Sensex gains nearly 250 points. Rupee remains on a tight leash against the dollar. Adani Group stocks end mixed in trade. 6 group stocks gain, but 4 stocks hit the lower circuit. Adani Group has lost 10.6 lakh crore rupees in market capitalization since the Hindenburg report. The Gangwal family will continue to trim its stake in Indigo. Shobha Gangwal likely to sell 4% stake in the airline worth nearly 3,000 crore rupees through a block deal tomorrow. It's the largest order in aviation history. Air India will buy 470 aircraft from Boeing and Airbus in deals worth $80 billion. With 31 new aircraft set to arrive by the end of this year, Air India could soon match Indigo's fleet strength. Income tax probes at BBC's Delhi and Mumbai offices over alleged transfer pricing violations continue for the second day. UK government sources said that they are monitoring the situation. The US says it values press freedom but is not in a position to offer any judgment of the probe. A 42-year-old woman was pulled out alive from the rubble more than 220 hours after a series of earthquakes that devastated Turkey and Syria. The death toll now crosses 41,000. United Nations says more than 7 million children have been affected in the region. Elon Musk is aiming to appoint his successor as the Twitter CEO by the end of this year. Says he needs to stabilize the company first and ensure that it's financially healthy. Well, first up to the day's market action, and well, it was another good day for the bulls. Markets saw broad-based gains with the Nifty close on a 1-month high. In fact, the Nifty rose about 86 points and reclaimed the 18,000 mark. The Sensex, meanwhile, gained 243 points to end close to 0.5% in the green. Reliance continues to be the biggest contributor to the Nifty rally. Mid-caps outperformed, while banks mildly underperformed. Prashant Nair is joining us now with a quick wrap of the day's market action.
Well, a strong close and a strong follow-through to the break that we saw yesterday, the break high that we saw yesterday on the Nifty. We took out some important levels as well, which I'll get to in just a bit. Banks underperformed, but they also started to come back towards the last 45 minutes or so of trade. Where were their gains? I mean, the bulk of the gains, if you want to look top-down, were in IT services, autos and real estate, which actually performed quite well. Bank Nifty on your screen, as I said, picked up towards the close, but not all the way. Nifty gains coming through in names like Tech Mahindra, Apollo Hospitals, of course. I mean, we had the management with us and the stock spiked after that, was one of the top gainers on the Nifty. Aisha did well. Reliance, I mean, RIL is starting to move for the last 2 days, and that contributed almost 50% to the gains that you saw on the Nifty. It's an index heavyweight. Bajaj Finserv, SBI Life, HDFC Life were some of the others which did well. There were cuts as well in the broader market. Market breadth has been negative for the last many days, and today was no different. Bharat Forge, CG Power, MCX, RHIM, Campus Footwear, Adani Green, Adani Power, E-Clerks, Uflex, TCNS Brands, and there were many others as well. This is the high volume losers list that I'm talking about. Gains coming through in Borosil Renewables, another one of those companies which was with us on the program earlier on results, the stock ending up sharply. You had Eicher, Torrent Power, Tejas Networks, GIC, RE and New India Assurance, the general insurance, government general insurance players perked up a little bit as well. 2 days running now, the market has done well. We've broken above a rising channel, a small rising channel, which met the Nifty at about 17,960, and we end the day above those levels very comfortably in a solid way. It's of course over to global markets, which are still undecided. We get retail sales, monthly retail sales, which I think are the next big data point out of the US after CPI, which left markets neither here nor there. And of course, we'll see if there is more wind in the sails for the market to add a couple of hundred points from here. Back to you.
Right, Prashant, thanks a lot for that. Now, as far as crude oil prices are concerned, they remain on a tight leash. Brent crude continues to hover around $85 mark. Oil prices are slightly under pressure today after a larger than expected surge in US inventories. Inflation in the United States remains stubborn, and investors fear that further rate hikes by the Fed could hurt oil prices even further. Well, on that note, let's take a stock of the latest developments with respect to the Adani Group stocks. 6 out of the 10 group companies ended in the green today. 4 stocks, however, that ended hit, in fact, the lower circuit. The group's market capitalization was eroded by 13,000 crore rupees today, taking the total loss since the Hindenburg report at 10.6 lakh crore rupees. In fact, Adani Green's market cap slipped to less than 1 lakh crore rupees from its peak of 4.6 lakh crore rupees last year. Despite the sharp fall seen in the Adani Group stocks, DSP Mutual Fund has raised its stakes in 6 of the companies. The asset management firm has raised its stake in ACC, Ambuja Cements, Adani Ports, Adani Transmission, Adani Green Energy and Adani Total. Meanwhile, a fresh plea filed in the Supreme Court has sought a probe into the red flags raised by the Hindenburg report on the Adani Group. The Apex Court has agreed to hear this application. It has been listed for further hearing on Friday. That's when the entire batch of applications on this issue comes up for hearing before the top court. Meanwhile, India's trade deficit fell sharply to below $18 billion in the month of January. The fall is largely thanks to imports, which are now at their lowest level in 16 months. Lata Venkatesh is joining us now to help us decode these numbers. Lata.
Yes, that's right. It's a very important trade deficit number. The January deficit coming in at 17.76 billion, a good 25% less than what it was in the previous month, December, when it was about $23.5 billion. It is equal to what it was a year ago, the deficit. But the important part, why the deficit in January is so much lower than December, is not because exports have grown, but because imports have fallen rather sharply. In fact, exports are also lower. They are at 32 billion compared to 34 billion in December and 35 billion in the previous January, year ago January. So exports are actually down, but imports are down very sharply at $50 billion in January compared to $58.5 billion in the month of December. And of course, a year ago it was 52. So imports are sizably lower, about 16% lower than what they were in December. And the Jan imports at 50 billion is actually lowest since August of 2021. So as you say, a 16-month low. The key imports that have fallen are actually gold and precious stones, as well as a big fall in electronics. Among others, chemicals and metals have also fallen a bit. Key exports that have fallen are basically textiles, engineering goods, gems and jewelry. Indication is that this is a global slowdown, and that's why all kinds of items are impacted. However, just to come back to the fall in the trade deficit, at $17.6 billion, the Jan trade deficit is lower than the average of the last 9 months. April to December, the average deficit is $25.5 billion. So substantially lower than that, almost 20%. And likewise, the Jan imports at 50 billion is much lower than the average import of April to December, which is $60.6 billion. So the basic point is, because of the imports falling so sharply, the big concern over current account deficit and concerns over rupee depreciation will be much less now after the Jan import number.
Well, staying with that story, government sources have told CNBC-TV18 that the trade surplus for services is at its highest level, with exports in the sector growing at 30% as of now. Sources also say that all ministries have been told to identify imports of non-essential goods. Finance Minister Nirmala Sitharaman continues to meet with industry leaders after the budget. Today, she was at the industry body's PhD Chamber of Commerce as well as ASSOCHAM. Finance Minister Sitharaman remained non-committal when asked about further reduction in export duties. But she also added that government is keeping a close watch on imports and that even a 3-month rise in imports could hurt India for the full year. Take a look.
The way in which I have spent this year's preparation and also the last year's preparation for the budget has been to go item-wise on customs duty. That is why we were able to bring it down in about 18-20 categories, and we very clearly said we will keep that momentum and we'll follow that process of where it is possible to reduce without hurting an Indian industry which needs it. We will bring it down. At the same time, keep very close watch on flooding or surge in any kind of imported goods. The surge sometimes hurt us. Even if the surge was only for 3 months, it can hurt us for a whole year.
Meanwhile, government sources tell us that the centre has pegged RBI dividend at a conservative 30,000 crore rupees for the next fiscal. The sources add that the government is confident of meeting the FY23 fiscal deficit target, even if divestment receipts fall short of the revised estimates of 50,000 crores. Sapna filed this report earlier. Take a look.
Well, the RBI dividend estimate for FY24 is seen close to around 30,000 crores. However, sources tell us that, the estimation as of now is conservative, which probably indicates that the government expects to top that number sometime next financial year. Having said that, also in terms of the fiscal deficit aim for the current financial year, the government is very confident of sticking to the number, even if the uncertainty on disinvestment receipts continues. That uncertainty stems from the fact that we're not very sure whether the ZRL OFS will actually go through, it will sail through. So given that, there could be some slippage in the divestment receipts. However, government is very confident that even in that eventuality, the every target for the current financial year will be met. Last but not the least, also the harvest production, the production numbers of food grains have just come out very recently. It's supposed to be a bumper harvest on wheat again. Here the government is very confident that this will help cool off wheat prices, which have been soaring to all-time highs almost during the entire year. And over the next 2 to 3 odd months, they also expect this to have a positive impact on food inflation. They expect that to moderate over the next 2 to 3 odd months.
Well, in the earnings corner, Vodafone Idea's net loss has widened to nearly 8,000 crore rupees from around 7,600 crore rupees in the previous quarter. The company's average revenue per user, or ARPU, improved to 135 rupees, but is still far below its competitors. Meanwhile, its net debt remained nearly at the same at 2.3 lakh crore rupees. In the con call, management said that they'll be using the liquidity for investment and not loan prepayment. Well, the Income Tax Department probes at BBC's Mumbai and Delhi offices continued for the second day. The tax department has alleged that BBC violated transfer pricing norms. The probe comes weeks after the British broadcaster released a documentary critical of Prime Minister Narendra Modi. The government had later ordered YouTube and Twitter to take down links that shared the documentary. Well, the Shrey Group resolution has entered its final lap. Sources have told CNBC-TV18 that the lenders have chosen NARCL as the winning bidder for 2 stressed entities. Nearly 90% of the lenders voted in favour of the NARCL bid. Now, the plan will be to send it to the Reserve Bank for a no-objection certificate. Ritu Singh now joins us with more details. Ritu, tell us, what are you picking up?
Well, lenders have declared NARCL, or the National Asset Reconstruction Company, as the winning bidder for the 2 Shrey companies under the IBC. And we understand that as many as 89.25% of the votes were cast in favour of NARCL's proposal, compared to about 84.86% for Autham, the other bidder, and only 9.5% for the third plan, which was from Varde and Arena Partners. Now, NARCL's resolution plan will now be sent to the RBI to secure an NOC, and thereafter it will be submitted to the NCLT for the final nod. But the one legal hurdle that the lenders could face is from the promoters of Shrey, who've moved the NCLT against the lenders' decision to not consider their settlement plan. Remember, we had reported that the promoters have offered to repay or fully repay the lenders by monetizing assets, bringing in an unnamed investor, offering equity to lenders and so on. But the administrator, we understand, has already responded to the promoters, saying that the lenders are not going to consider the offer and they can submit their proposal to RBI if need be. Now, as far as NARCL's offer is concerned, it is 5,555 crores in NPV terms. In gross term, the offer stands at a little over 14,800 odd crores, which includes 3,180 crores as cash, another 3,500 crores in committed instruments, 8,000 crores worth of OCDs and 20% equity worth 200 crores to the lenders of Shrey Infrastructure.
Right, Ritu, thanks a lot for that update. Moving forward now, the Cabinet has approved induction of over 9,000 additional troops into the Indo-Tibetan Border Police, primarily meant to guard the Indo-China border. This will entail 7 new battalions. The establishment of these battalions and sector headquarters is expected to be completed by 2026 at a cost of over 1,800 crore rupees. Well, the union government expects record-high wheat and rice harvest in the current crop season. According to the Agriculture Ministry's second advance estimates, wheat production may touch 112 million tons this year. Meanwhile, rice production is expected to be more than 130 million tons. While surplus food grains should keep prices in check, Food Secretary Sanjeev Chopra told CNBC-TV18 that government's policies will also aid in reducing wheat prices. He added that export restrictions on non-basmati rice will be reviewed in due course.
Decision of the central government of selling about 30 lakh tons in the open market. This was done on 25th of January. Since then, prices have come down and they are ruling now less than 2,500 rupees. And we are hopeful that with the policy decision that the government will take and is taking, the prices will come down further. Basmati rice exports, of course, there is no issue. With regard to the non-basmati, there was restriction imposed last year. So government will review the situation as and when we are finding that the production figures and the procurement figures are in line.
Indigo's co-promoter Rakesh Gangwal's wife Shobha Gangwal is likely to sell a 4% stake in the company via a block deal. Sources tell us that floor price has been fixed at 1875 rupees per share and the offered size is 2930 crore rupees. Now there will be a 150-day lock-up period for the investors after the block deal. Lufthansa has been hit with a major IT outage, forcing it to cancel and delay flights across its different airlines. The German carrier said that IT systems failure had been caused by construction work in the Frankfurt region that had damaged broadband fiber optic cables. Frankfurt Airport, Lufthansa's main hub, said that it had stopped most planes from landing to avoid overcrowding as thousands of passengers were unable to board their flights. Well, sticking to the aviation space, Air India has signed deals with Boeing and Airbus to buy 470 aircraft worth nearly $80 billion. This is the largest order in aviation history and Air India's first since 2005. Madhya Mujawar now joins us to explain what this means for the aviation landscape. Madhya.
Air India's order suggests how the Indian aviation landscape is moving for better times. Air passenger traffic is surging despite soaring airfares, so there's a huge travel demand and therefore an opportunity for airlines to expand. Let's talk about where Air India as a group stands currently. Its market share in the domestic traffic stands at 26%, while Indigo controls a huge chunk of 54.9%. So clearly, Air India has a huge scope to expand in the domestic market. Now let's see where Air India stands in overseas travel. There are many routes where Air India has a marginal presence and has a huge scope to expand given the rising traffic to these regions. I'm talking about many of the US and European destinations, Middle East, South Asia, Southeast Asia and South African countries. To expand its operations on these routes, Air India will have to compete with Emirates, Etihad, Qatar Airways, Turkish Airlines and Singapore Airlines, among others. Now, these airlines offer long-distance, one-stop connectivity to Indian travelers, so a clear opportunity to tap that traffic for Air India. Now, to undertake such expansion, Air India will need more aircraft, and that's where the new order comes into the picture. It has 220 aircraft in its existing fleet. Of the 470 new aircraft order, 31 will arrive by the end of this year, and some 36 leased aircraft will take its fleet to 287 planes in the short term. That's close to Indigo's over 300 aircraft. Now, in the long term, upon completion of deliveries, Air India will have 726 aircraft, while Indigo will have around 800 after it receives around 500 that were ordered earlier. But Air India will still have an edge over Indigo with around 120 wide-body planes. Now, separately, Air India's order has brought business to 3 engine makers: Rolls-Royce, GE Aerospace and CFM International. Pratt & Whitney, which is facing issues with its neo engines, has not received a single engine order from Air India. So that's where things stand as of now. We continue to watch the aviation space closely for exciting and interesting developments ahead.
Welcome to the conversation with CNBC-TV18's Jude Sanith. Hitachi Energy's global CEO, Claudio Fascin, says that despite a slowing global economic cycle, the transition to clean energy would remain largely unaffected. The company also projected supply chain constraints to continue for 2 more quarters at least, even amidst long-term growth drivers for the India business. Take a look.
I think we're in a lucky position. The space we're in is right at the center of this clean energy transition, and it's somehow the cycle we're in is a bit decoupled from the overall economic cycle of GDP and consumption. It's really driven by this whole momentum that we see globally. We see it in India, we see it in Europe, in the US, and in Asia. Starts now picking up in Japan as well. It's across all markets. We're kind of on a cycle that it's on its own. It's supporting this demand. There will be ups and downs. This is not going to be an easy ride and a smooth linear ramp up. But it is going to be a midterm to long-term positive momentum. And we want to make sure that we do our part to contribute, particularly to be able to accelerate the clean energy transition, because we need that.
Do you foresee revenues to continue to be muted even as order book grows, or do you see some recovery on the revenue front as well?
As we communicated in our Q3, we do have revenues affected due to the various supply chain constraints, including some of the semiconductor chips, etc. in that. And the situation is becoming better, so we don't foresee that this will continue forever. But we definitely see that this will be at least affecting a couple of more quarters from now. But from the management standpoint, from the company standpoint, we are taking all the actions required to mitigate some of them, partly in the short term to mid term. Right. But as Claudio said, while our long-term demand drivers in India are intact, growth drivers in terms of, as you rightly said, high capex, which is also articulated by the budget, both in terms of the infrastructure as well as on the rail. All those things are opportunities for us, and we are growing higher than the market.
Well, SEBI has mandated companies to file issue summary document for IPOs, share buyback, open offers and share institutional placement. The issue summary document should be filed via stock exchanges and be put up on the website. The document should have structured, relevant data points to aid analysts and market participants. Well, that's all the time that we have for. It's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates will continue right here on CNBC TV18.